Good afternoon, everyone. My name is Jeremy Goldberg. I'm the president and quarterback at LeagueApps, and I'm excited to welcome you to today's conversation on financial management for the COVID crisis and beyond. And we're actually bringing this topic back because it was so popular. There were so many organizations that were out there that have such profound questions about how they're managing their finances at this time that we wanted to respond to that need and bring back some incredible experts and bring that perspective to you today. Before I jump in, we've been together now virtually for almost 7 weeks, and we're starting to see glimmers of hope. I think over 30 states have started to relax some of those guidelines. I know organizations are starting to think slowly what that return to play looks like, and it's a testament to the resiliency and the commitment of so many of the organizations that are out there that you figured out how to kind of persevere and navigate the situation that we're in. And today's conversation is really about helping you have the access to the best kind of expertise and get your questions answered as you make some decisions and try to navigate a lot of the financial questions that every youth and local sports organization is confronting. What our data has shown is that over 90% of revenue for youth sports organizations has literally been paused overnight, right? And the primary revenue stream of the programmatic revenue, the registration revenue that you collect, has stopped. And so how are you navigating that challenge? What are the decisions that you're making in terms of the financing you might take advantage of, in terms of government programs that exist? What are the ways that you're making decisions around personnel? How are you thinking about opening back up and what that means for your employees, the liability that might relate? How are you dealing with you're renegotiating contracts if you're in rent agreements? These are all topics that I think we'll be able to cover and address today. And it's part of a larger theme in recognizing that in terms of youth sports and in terms of this period of social distancing, it's critical for us to take advantage of the opportunities to be together. And then as an organization, if you can figure out how to survive, you're going to figure out how to thrive. That the world needs sports. It needs youth sports. Parents need the kids out of their house. All the benefits that come from sports around physical health and mental health, all the lessons that people learn through them. People recognize in its absence the importance of it. And the real question is what can we do to get through this difficult period so that youth sports comes back better than ever before? And that's really the jumping off point for today's conversation and all the things that we've done with respect to NextUp. I've had different quotes I've shared from Muhammad Ali over the past number of weeks. And today I want to go into the world of basketball, as I've been thinking about basketball a lot. As the closest form to sport I have, I think, is the Michael Jordan documentary series on ESPN. There's a great quote from the legendary John Wooden, the UCLA coach, the winningest coach, one of the winningest coaches of all time. And what he said was, it's what you learn after you know it all that counts, right? It's what you learn after you know it all that counts. And so I think for many of you, you never would have thought as a sports organization, you would have to understand the intricacy of SBA financing, of 1099 rules, of force majeure. There's things that you maybe never had understood before. And maybe you think you have a lot of those answers. But I think with the experts that we have here today, I think you'll recognize that it's the opportunity to continue that knowledge and continue to anticipate what's happening to put you in the best position to kind of maintain your organization and put yourself in a position to have success coming out of that. And today's conversation is really just the start of a conversation. One of the things I'm going to invite you to do is on the Q&A tab, you can go ahead and add questions that you have. Anybody can see what those questions are that people have and then upvote those so that surfaces for me and the panel the questions you're most interested in. So as I'm talking, if you have very specific questions around what's happening in government or about PPP or about legal related questions you're confronting, go ahead and add those into the Q&A tab. And I'll add that to the questions that we've received from many of you in advance. There's also a Slack group that we have that we'll share in the chat tool a link to. So if you want to continue the conversation, there's a chance to go in there, pose additional questions of fellow organizations, as well as experts that we have dropping in that can help get those questions answered as well. And we'll identify a few other ways that, again, you could build on today's conversation and push that knowledge forward. So with that, I'm excited to bring in our distinguished panel. The way this is going to work is there's such expertise here. I'm going to spend time really focusing on 3 topics as a starting point. I'm going to bring in Nick Simon as a starting point, and we'll talk with him with all of his legal experience and experience on sports financing, is how to think about as a small business, how do you take advantage of the programs that are out there? What are the challenges you might be confronting, and what is his advice? What is he seeing for some of the top organizations he's working with? We'll then get a sense of what's happening legislatively that might influence what that program is, how long it'll last, what other things might happen out of Washington, and leverage the incredible expertise of Terri and Jason, who are really the top lobbyists that are focusing in the world of youth and local sports. And then last but not least, bring in Ben Brodsky. And Bren brings in a legal perspective that can speak to a lot of the employment-related questions that you might have, questions around liability, around real estate, and really round out the conversation that we have today. but I'm going to put Nick on the spot first. And Nick, I appreciate you joining. I know you got a great reputation that precedes you for all the incredible work you're doing as a partner at KMK Law. I know you were at Covington and Burling before, which the only thing I know about Covington and Burling is all the smartest people I know that went to law school somehow ended up at a firm like that. And of course, you spent some time clerking. I also know you went to law school at Duke. So I don't know if that makes you as rabid of a fan, given the fact that you went to undergrad at Wake Forest. I don't know where your ACC allegiance comes in, but I'm going to have to assume that you have to be a sports fan because I don't think you're allowed to go to Duke if not, or spend time in the ACC. And what I'm excited to talk to you is get a sense of how you've been engaging with your clients around the PPP program. And maybe we'll just start there. When you think about local organizations, sports organizations, when they're confronting this question of PPP, what are the most important things that every organization has to understand about applying for a PPP based on where we're at right now with that program?
Thank you for the kind words. I think some of those are true, some of those are not, and I'll leave it at that about which ones are maybe not applicable to me. But I'm a fan of both, and I'm excited that, I don't know if it's official yet, but I think Wake Forest is getting a new coach today. So looking forward to a return to Wake Forest glory basketball.
There you go.
Yeah, so I'll start with the PPP. I think I've been kind of engaged in this from the beginning, and the kind of commentary both out of the politicians and both out of the news organizations never really matched what was in the program, both in terms of who was eligible and kind of what is in the law. And I think then the reality kind of caught up, and there's a lot of turmoil right now about in my opinion, they're making some changes to it. And the program, there wasn't the infrastructure between the banks and the SBA to actually process it. And I think everyone who was engaged knew that was going to happen, but no one wanted to slow the train down. And so it's really been a work in progress of every few days, there's some change that's trying to be made to fix a problem. So I think where we are now, there are funds available. The challenge is finding the right bank or non-bank lender partner to get through the system, because you apply through a bank or another non-bank lender, and then that bank or non-bank goes to the SBA. And the connection between the banks and the SBA has been, let's just say, rocky at best, and the SBA has kind of continually changed the process. And some banks were better at setting up automated systems to get their applications through. And so it's hard to know what's happening there. But so my advice is your first point of contact should be your bank that you bank with. The banks still have to comply with some anti-money laundering rules, so it is going to be difficult to start a new banking relationship based on a PPP loan. So the first step should be your bank. If you're not getting through with them and it seems like you're not working, then rather than going to another large or mid-sized bank, you really should be going to the really small community banks in your neighborhood. That's where the focus is now, is trying to assist them, and they're probably going to have a better chance of getting you through. If that doesn't work, then I think going to the fintechs, the PayPals and Squares and those organizations. I don't have a ton of clients working with them, but I kind of follow the press, and it seems like that again they have a different set of rules that they're under than commercial banks, so they will tend to be more receptive to new customers. But the first step is finding the right partner, and I know it's difficult to hear, but banks are struggling with this just as much as the businesses are. I mean, I have a lot of clients working with a lot of banks. They're trying the best they can. They're operating under very difficult circumstances. There's limited funds. They have more unhappy customers than happy customers. And frankly, there's nothing they can do about it. So I think that's the first step, is finding the right bank. And it's likely going to be your existing bank, potentially a small community bank, or a fintech.
Great. So one of the things that maybe just to elaborate is, so the first thing is our organizations focusing on PPP, and I don't think a lot of them are. I think we've seen less than 15 to 20% of the youth organizations have really been that have signaled to us that they've applied, have received it. And imagine if you were to apply that to broader organizations, there's a lot that aren't even in the game or even responding to a survey about that. So then the question becomes, if you're saying, hey, focus on community banks, I think if you don't have an existing banking relationship, are there certain kinds of organizations or communities, rural communities or minority communities that they've tried to signal to make sure that the funds are available? And is that happening just because they're providing more money to the community banks, or what are the ways that they can take advantage of any of those provisions?
Yeah. So I'm gonna answer the first question about, I think you said that only 15 or 20% have applied. And I think this is probably applicable to a number of the groups on the call. The PPP program really only works for businesses with W-2 wage employees. If you don't have a payroll that is W-2 wage employees, you can still apply, but the amount of money you're eligible, it just doesn't really work. And when I've had some folks I've talked to there, the numbers are so small that it's going to be really hard to get somebody to loan to you. And then at the end of the day, even the time and effort is really not worth, a few $1,000s you're going to get. You're better spent trying to renegotiate your rent or kind of some other obligations. So I think that's the first step. Is this is really focused on businesses with W-2 wage employees. There are some provisions in the law that kind of, directed the SBA to draft regulations to focus funds at minorities and rural communities. And this has kind of been a drinking water out of a fire hose. Nothing's come out about that. The way that they've focused that is allocating certain funds to small community banks. And then last night, they actually kind of shut down the E-Trans system for banks with, I think, over $1 billion in assets, and only the small banks are allowed to apply. The banks have been looking for guidance about how are we supposed to prioritize, because they have both, I've heard from a number of banks that, look, we're not actually prioritizing our biggest and best customers. Oftentimes, we're prioritizing the easiest customers, the ones who are the most organized, who kind of give us the easiest information that we know are clearly eligible, and it's an easy, simple underwriting process. Sometimes it's the customers that they know that need it most, right? If they have a customer that they know has a mortgage payment due or rent due, and they're going to go bankrupt if they don't get that, I think. And so they've been trying to figure out, how should we prioritize, our own needs versus the customer needs versus these public policy needs. And they really haven't gotten guidance until recently, which is now just saying don't go to larger businesses. But the banks have been struggling with it as well. And what's happened is there really hasn't been a prioritization. It's just been who can get through.
Yeah.
Because everyone runs through the same funnels. And so again, I think it is your bank, a community bank, or then maybe a fintech.
So just to put a fine point on this, and then I know when we'll get into the legislative question, the question is, are there fixes to this? But if most of your organization does not have W-2 employees, if you have 1099 employees, then the way that the 1099 employees individually can go ahead and apply, and they could go through their own process and navigate this. But if you're a W-2, if you don't have W-2 employees as the receiving organization, you're not in a position to receive those funds. Is that, that's great.
So yeah, if you can, I mean, if you're a business and you have no employees, just 1099s, you can receive funds, but the amount you're going to receive is really limited to your self-employment income in 2019. It's going to be 8 weeks of that, and it's capped at essentially $15,000. So if you're a sole proprietorship or a business with no W-2 employees, the max you're eligible for is about $15,000. And the same thing for all of your 1099s. They each can apply individually. But again, the max you can get is $15,000, and that's only if you made $100,000 in 2019.
Right.
And again, it's just a challenge of every application takes the same amount of time to do, and whether there is a prioritization or not, it's difficult for the volumes of applications and approvals to get through based on
right.
those numbers.
So as currently written, the way the rules work, you can help your coaches. You can provide some guidance to them if they're the 1099s to try to help them do this. To your point, if it's hard enough for a small business to get the attention, it's even harder to imagine how individual the 1099s themselves. Again, a lot of that depends on the banking relationships. And in most cases, if you're going through community banks, that's your best shot. I do think that the other things that maybe it's important to ask about is there's some structural questions. If you're a nonprofit, you can take advantage of these programs.
Yes.
What if you're an LLC, and how does it work if you're an LLC and you're a partner for an LLC? How does that work in terms of relief for salary and the way those calculations work?
Yeah. So if you're an LLC or a partnership, and I'm going to use the word partnership to refer to both types of organizations because that's how they're taxed. The partnership is the business that applies, but you are allowed to include the self-employment income of your partners up to $100,000, annual salary, but no more than they made in 2019. So if you have 3 partners that each made $50,000 in 2019, you get to include that $50,000 in your payroll cost calculations. You don't get to include the benefits paid by partners, but you get to include their salary costs. Partners themselves are ineligible to apply. So 1099s apply on their own. Sole proprietorships apply on their own, but partners of a partnership they do not apply on their own, and their income counts as the payroll for the
Great.
partnership.
So to summarize all this, and then we'll talk about two other quick topics, and we'll bring in the others. If you're an organization that has no or limited W-2s, most of your organization is 1099s. You as an organization can still get money to cover some rent and whatever limited payroll you might have for yourself, whatever else. You're just not going to get that much relief, and it's hard enough to get the loan to begin with. You can provide guidance to those 1099s and try to help them through the process, but they also are capped at 15,000, and it's also complicated for how they're navigating as well. If you happen to have W-2 employees or you're kind of structured as a partnership, then there is the ways that those calculations will provide the ability to get more payroll assistance. So one is, before we leave the kind of payroll protection program, one of the other things that's happening is there's new guidance even for organizations that are receiving it. So one thing I wanted to just make sure everyone understood, even if you received kind of the PPP loan, is there's a new kind of necessity provision that it used to be just certifying that your business was hurt. But as I understand it, the new Treasury guidelines are saying if you have other sources of liquidity that you could reasonably tap, then and you don't necessarily need the money, then going after the money is a problem, and you actually have to return that money. So can you explain what that might mean, and
Yep.
just in case that might impact anyone here?
Yeah. So the normal SBA loans have this test called no credit elsewhere. The SBA has to be essentially the lender of last resort. The business owners don't have liquid assets, and you can't get a loan from a bank. That requirement was waived in the statute. So businesses, their lawyers, their financial advisors all said, well, the assets of the business and the liquidity of the business aren't a factor in this because Congress said it's not a factor. And then all the public companies announced loans, and so they came up with this guidance that says the necessity certification is both your business has been affected and you don't have other adequate sources of liquidity that would not unreasonably, significantly harm the business. So if you received a loan, you need to look at that guideline and look at, do you have adequate sources of liquidity where you don't need the loan? If you're a public, the guidance really was about public companies. How that applies to private companies and nonprofits is uncertain right now. My general thought is the things that really matter are your cash on hand, whether whether you are experiencing or can reasonably expect to experience a significant revenue drop off, kind of untapped existing lines of credit, and frankly easily obtainable sources, and then I guess, are there big, probably not for this group, but are there kind of big expenses that you can cut? Like if you have executives making millions of dollars a year, you probably should think about cutting those before you take the PPP loan. I think for most private companies, this guidance won't affect them, but it's important that they think about those things, document them so that they have, because again, it's a certification. We thought about all of these things, here's why they don't apply to us. And you have until May 7th to do that process. And if you don't qualify anymore, you essentially pay the money back and move on. But if you're in that situation where you have some assets, particularly cash or other liquid assets, you should be going through that process now and document.
Yeah, I think that's a great point, that documentation and review. And one thing we can do is within our Slack group, post the Treasury guidelines themselves. If there's questions, we can certainly work with the panel to provide some follow-up answers. So we've just described the program as is. We didn't even get into the EIDL program and everything else, other ways of financing. So we'll come back to that, because I'm interested to bring in Jason and Terri riding in as white knights here, because we've just heard all the dynamics here. And even if I see the questions that are flowing in, and what we're seeing is, wait a second, there's a lot of ways that youth sports organizations may not be able to take advantage of it, because if they have a lot of 1099 employees, if they have a lot of expenses that aren't necessarily encompassed in the very category of rent or payroll, it's hard for them to access the relief, not to mention the fact that it may be hard for them to get it even if they're fully eligible, given the complexity of navigating the system. So the first question, and before I lose sight of the full introduction, Terri Kowski is the CEO of Active Policy Solutions. And what I appreciate is not only is she an adjunct faculty, or was an adjunct faculty member at Georgetown, near and dear to my heart as a Hoya, but she was the public policy director at the Women's Sports Foundation. She's worked at the ACLU, and she's a former volunteer basketball coach for Koa Sports, which is an incredible youth sports organization that LeagueApps is privileged to work with, and do great work in the DC area. And Terri is probably when the person and lobbyist and advocate that has spent the most amount of time thinking about youth sports and local sports and unified sports than anyone when it comes to kind of communicating on Capitol Hill. So we're excited to have you here, Terri. And we're also thrilled to have your colleague, Jason Marmon. Jason is the COO at Active Policy Solution, and he's bringing all the Hill experience, specifically his work for many years with Joe Sestak for over 6 years. And we appreciate you being here as well. And so your combined brains, I think the first thing I'll say is, what is happening right now? What is the current legislative status when it comes to the funding that's available for small business organizations? Before we get to a wish list of what could happen, how would we describe what is happening right now? Are money being replenished? Are there changes being considered? How would you describe the legislative environment when it comes for the kind of assistance that is currently being discussed and available for you sports organizations?
Yeah, well, there's a couple things going on right now. You're seeing some of it in the public sphere. The majority leader, the head of the Senate, has said that he wants, as some sort of agreement, some sort of liability shield. And as youth sports practitioners, this is something that I know that you're going to have to face at some point. What are the new norms? But there are a lot of industries that have been grappling with that, some well and some not so well. And so, we don't want to see, his demand is he doesn't want to see this wave of lawsuits coming as another sort of economic hurdle. And so that is going to be hashed out. The general consensus is the Senate wants this House to introduce some sort of bill next. And so talking to people on the Hill, the Speaker and Minority Leader in the House have asked their caucuses to submit what their sort of wish list is, and some sort of bill coalescing within the next week or so. We've heard this before, and it's been pushed back. I suspect it'll be probably pushed back again. But we're looking at, with the PPP program running out of funds, another sort of maybe infusion bill as another stopgap bill before there's a larger recovery bill.
Right.
But there will be some legislation. And we saw in the last bill that they did try to modify the rules. There's a lot of concern from the Congressional Black Caucus and some of the interest groups in Congress to make sure that this money is going to small businesses and minority businesses.
Right.
Republicans commonly have the statement that they want to wait and see a little bit more and see how it goes.
So basically what I heard you say is there's another bill that might pass. And that the bills or the things that are being discussed right now is this question of liability. So if you're opening back up again, what is the way that you're protected? Second is they've already added another few $100 billion into the fund, and you're saying that there's a likelihood of them putting more money into that fund for people to get loans, and then the possibility of maybe even of influencing some of the eligibility requirements connected to that, among other things that might happen. A couple other related questions just about what to anticipate. One of the questions is that the way that the PPP loans for those organizations that have gotten it or even applying was really designed for like an 8 or 10 week period of a kind of payroll, right? I think 2.5 times your payroll period. Now it seems like there's disruption might continue longer. So is there a discussion on the Hill to extend that period of time so that if you already have a loan, you might be able to get more money and cover a longer period of time, or if you're getting it applying for the first time, there's a longer window. Is that part of the discussion on Capitol Hill?
It is, but part of the complicating factor is starting today, we are seeing states start to renew their business operations. So as more states experiment with opening back up, it becomes more politically complicated for an across-the-board extension. I would expect that would be a serious discussion. Whether it actually comes about would be probably more driven by when states decide to open up and how those opening up. Jeremy, one point back to what I was saying before about especially like sole practitioners and your 1099 and even your small businesses navigating this. I used to work, as you said, for a member of Congress, and one of our jobs should be, and for all your members, is helping you through this process. So if you are having problems or you are having questions, please call your members of Congress, your representatives, and both your senators, and get them involved, get them engaged. It's hit or miss. Some offices are really, really, really good and can do miracles, and some of them might not return your call. But if you don't call, you don't ask, you don't get.
Yeah, that's great. So Terri, I'll bring you in real quick for just the question of looking forward, because I think one of the things you're saying is a lot of the design and the programs aren't directly aligned with what's happening in youth and local sports. So how are you approaching that? And I know there's a coalition that we're honored to be part of and helping to support and lead. But describe those efforts. What is the gaps and what are the efforts that are trying to solve those gaps, and what could happen, what might happen?
Thank you, Jeremy. Great question. And as I've been monitoring the Q&A that's coming in, I see that those are the hands that are being raised across the board is, what we're finding and what we're hearing is that the way PPP and the aspects of CARES have been structured doesn't really account for how youth sports programs are structured, particularly the nonprofits and the small organizations. Most youth sports operations are lucky if they have one full-time employee. Most are run by independent contractors. Most are run by volunteers. I saw a question here from a Dominic asking the same question, how does this help us? And the challenge right now is, quite frankly, it doesn't help you very much, because if the calculation of your relief is based on your employees, and then there's a certain cushion there that can go in for overhead. If you don't have any employees or you only have one, it's, as Nick said, it's really not even worth your time to go through the hassle. But the challenge is, for many youth sports organizations, as many of you participating understand, that doesn't, just because you don't have an employee, you still have a workforce that could be 50, it could be 100 coaches and volunteers who comprise your labor force. And there's a significant outlay of expense for those organizations in terms of getting them ready for the season, with the training, with the background screening, and all the things that go into having a season. And now these organizations have already outlaid that expense to support their workforce, and they're returning fees for not having the season, they're not having the events, and so there's this huge issue here. So a group of us have come together called the Play Sports Coalition to bring these issues to the attention of Congress. We are a coalition so far of over 500 organizations, of which we are so grateful LeagueApps is one of the organizations leading the charge to share these issues and call upon Congress to help the youth sports community figure out, one, how we can provide immediate relief to these youth sports providers who aren't being covered either fully or at all through the existing programs. We have a proposal out there that we're asking for $8.5 billion relief fund to go to the hands of youth sports providers to fill these gaps.
Great. So I think one other question I'd ask Terri is, does that have a chance? Are there congressional members that seem receptive? And I know we don't want to preview the whole legislative strategy. I know that's to come. But are there ways that, as Jason was inviting people to contact members of Congress, if they want to get involved, is there an opportunity to get behind this movement? I think hundreds of organizations have now signed on.
Yeah. So first of all, we do have a good chance. Our coalition has already started having conversations with both the House and the Senate, and we are getting bipartisan support. And there is a growing understanding of there are organizations that are being left out. There are organizations like youth sports that, as Jason was talking about, and you were asking the question of what's this prolonged recovery period going to look like? We know that youth sports, even as states are beginning to open, youth sports can't come back right away. They can't come back in the same way. So there needs to be a diligent and thoughtful process about how do we get safely back into sports, which is a second component of what our coalition is working on. But then also, what do we do to ensure these organizations that provide such a critical role for youth can keep their doors open so they can, be there for our kids when the crisis wanes. So we haven't gotten laughed out of Congress yet. We're in the process right now of building champions on the Hill who can work with us to really think through what this legislation could look like, how it will be allocated, how it can be easily accessible to organizations to ensure there's not a lot of red tape so it becomes more costly to access than it is actually to help keep the doors open. So we're in the process right now of doing all of that. And if you want to get involved, we are going to be launching soon a website to sign up for the coalition, but in the interim, you can contact myself, you can contact Jeremy, and we have a coalition list that we're growing right now to build our ranks and ensure that our organizations and the community of youth sports is united together to bring these attention to the policymakers.
Yeah, that's great. One thing we can do is, I know we're waiting for the launch of that website, which is imminent, but just if you're interested, two things can happen. One, we'll post the information in the Slack group about how to get involved. And also in the chat tool, there's a landing page that LeagueApps put up for our partners just to indicate and raise their hand if they want to learn more. So we can go ahead and share that link so we can at least capture emails and information. And then with Terri, make sure you have all the information how to get involved. But I'm certainly excited about the product, the prospects of this, and certainly appreciate Terri, you and APS's leadership with Jason to make this happen. So Ben, I'm going to turn to you and bring you into the conversation. And you're a distinguished lawyer. I've been a partner at BFW down in Miami, and previously that was at Coffey Burlington. And one of the things I appreciate is you have a range of legal background, legal cases and topics that you focused on. So my expectation is you can handle anything we're throwing at you. And one of the things I'll start with is more from an employment angle, which is as organizations are dealing with their finances. We've heard about the revenue side of things, right? Which is money that they're not collecting, but maybe there's some government assistance they can apply for. Maybe they have access to debt. There's different ways of thinking about bringing money in. But the reality for a lot of organizations is they're trying to figure out how to navigate their expenses. So that relates to questions about furloughs, around layoffs, around making people go from full-time to part-time, and how that is all happening in the backdrop of how the people that they might want to rehire again might be taking advantage of unemployment insurance. So maybe just as a first overall question, what's the advice that you might give the organizations out there for how to think about, as they're thinking about headcount and the way that they're managing kind of their expenses, what should they be thinking about and how do they approach that as a topic?
Well, Jeremy, thank you for having me on the chat, and I appreciate everybody's perspective. It's been very interesting, even from my perspective, not being a youth sports league operator, to hear everybody's advice. The employment question is a pretty complicated one. So rather than sort of try to get into the specific details, I'll just give some general guidelines for the people on the webinar to think about when they're making personnel decisions. So first things first, when you have an employee, sometimes that employee has been hired without a contract. They're just an at-will employee that you hire. You don't promise them a term. You just say, this is going to be your salary, your hourly wage. These are going to be your benefits, and welcome to the team. If you have employees that have contracts, you need to read those contracts before you make any decisions about what you're going to do with their employment status, because there may be things in those contracts that you don't quite recall, and then you make a decision you're going to let that person go, and oops, they get 9 months severance, or there were notice requirements you had to give them before you decided to terminate their employment. So the first thing you need to do is you need to look at your contract, if you have one. Many employees, and probably most employees, don't have employment contracts. So the second thing you're going to want to look at is, what are the laws in my state in which I operate with respect to my employees? Are there statutory requirements that I have to follow in my state before I reduce somebody's hours or their wages, or before I terminate someone? For example, California has some specific rules about how paychecks need to be paid out after people are terminated and the like. So you're going to want to look at your specific state laws just by Googling. And I know this is sort of inviting some armchair lawyering, but there's a lot of state employment resources out there that are easily acceptable to business owners. You're going to want to look at those resources and do a little research for yourself for your specific state or what your requirements are. And then it's really just a business decision about who's vital and who's not. You know, people who are terminated are qualified to apply for unemployment insurance. Many of my clients have furloughed their employees, which really just means we're terminating you and we hope that you come back later, which qualifies those employees to apply for employment insurance in their state. And so it's probably going to come down to an employee by employee determination of who's crucial and who's not.
Yeah. So there's the employee question. And one of the questions, and I don't know if you've been following the PPP law, and this may be a question we can bring Nick back in, but if you've let someone go, but now you've got this PPP financing, how does it work? You have to hire them back, or do you have to hire that employee back? Or do you just have to spend the payroll in a specific way? But how does it work for former employees if you've received now funding afterwards, and the mechanisms about bringing them back on?
Nick, you want to handle that?
Yeah, sure. So there's a couple different ways that impacts the program. The first piece is, once you get the loan, the amount that you are eligible to have the loan forgiven, so transferring from a loan to a grant, is based on certain expenses over the next 8 weeks. And the bulk of that is payroll expenses. 75% of your forgiveness must be for payroll. So if you've let employees go and you don't bring them back, it's going to limit, frankly, what you can get forgiven on the loan. The second piece is after the 8 weeks are over, let's just say you spend $100,000 on these expenses, you then have to look at what your head count is compared to a prior period. And I'm going to skip the details of exactly when and how you measure because that stuff gets complicated. But if your payroll's at 50% of what it was before, you only get 50% forgiven. So the law is designed to encourage you to bring back your employees, full-time, even if they don't have any work to do. And frankly, I have a lot of clients and they've asked that question. They say, what am I supposed to, I don't have anything for them to do? My response is, well, find something for them to do. Have your factory or shop be the cleanest factory. Have them call your parents and check in on them. Have them, do team Zoom meetings. Do everything you can to find something for them to do. That's the purpose. And then if you did not bring everyone back, and I saw questions on the chat, there's this cure provision that as long as you get back to full payroll by June 30th, you get full forgiveness. That's what the law says. I think there's some details that need to be filled in there about exactly how long you have full pay. What if you get back to full payroll for one payroll period and then drop after that? I'd imagine that that's going to be a problem. So there is some details to be filled in, but generally, if you get a loan, you should think hard about bringing people back and does it make sense? And the other piece maybe I'll say there is, again, this is nowhere in the law, but these are the questions that companies are wrestling with is, like the loan covers for 8 weeks. If I have no revenue, what am I going to do on July 1? Am I allowed to then fire everyone on July 1? And my answer is, I can't find the portion of the law that says you can't do that, but I'm pretty sure that if you do that, there's going to be some risk. And so for businesses that are entirely shut down with no revenue and no prospect of revenue for the foreseeable future, there's some risk in the PPP about bringing employees back that you then have to let go.
Yeah. So a couple of questions, and one thing I'll invite people is, as we open this up, I'll post the next question to Ben, and then I'll encourage everyone to go to that Q&A tab. If you see questions that really resonate with you, go ahead and give that a thumbs up, click, and that'll help us kind of surface those questions. But there's an interesting liability question because, Ben, as people come back and they're worried, they want to open up their programs again. There's obviously questions about state rules around social gatherings. Youth sports organizations are used to, and even adult sports organizations are used to having some kind of waivers around liability. But then the question is what are they protected by? Like, are if there's state rules around social gatherings, do they need to modify their practices? Do they need to modify their liability waiver, even if they're waiting, as Jason said, for Congress to provide some more shields? How does an organization think about their own liability and risks here when it comes to kind of having customers again, so to speak? In this case, would be parents and families or participants at the adult level.
So Jason mentioned the liability shield that some members of Congress are trying to make as a precondition to passing a further bill. And it's very possible that that liability shield will get passed in some form. And then there'll be further fights down the road about whether that liability shield is constitutional. And that's going to be something that's going to be sorted out for a long time to come. So for my clients, I'm not advising them to assume that the federal government is going to protect them. I would very much urge them to take steps themselves. You're definitely going to want to modify your liability waiver to ensure that everybody who's participating in youth sports, from the participants to the spectators, are signing waivers acknowledging that when they're gathering in groups that are necessarily going to have close contact, like in a sporting event, that they acknowledge the risk and they're waiving and releasing the sports league from any liability. I wouldn't proceed without modifying the liability waiver and making sure that everybody signed it. That's on the participant side. Let's talk about on the employment side, your own employees. What are your obligations? So basically, no one is forced to work. So if everyone's going to show up to work, I would also recommend that there be a waiver that the employees sign and say that they acknowledge that by coming back to work, they may be put in place and put in contact with people who may be sick and may make them sick. But at the same time, you need to exercise good judgment. Don't pack 10 people into a crowded shed without masks. Use your head, use your common sense. make sure people are protected as much as they reasonably can. And that's how I would organize my business on a going forward basis.
That's great. Those are great tips. So two things I hear. One, even if you had a waiver for the prior season that got interrupted, it's worth updating that waiver and making sure that everyone is signing that's involved with the organization, the programming, and that would include, the families, but also, or the participants, and if they're of age, and then also the coaches or the people that are helping to be part of that organization. And then separately, there may be an employee-focused waiver that's just acknowledging if they're being part of your workplace or environment, that you're not liable for those risks. And putting those kind of two documents in place, I think is a great tip. And I know a bunch of thumbs up are coming in about that. So starting to fire a bunch of questions. Please, Nick, jump in.
I have one quick thing. I think, Ben, I think that's 100% right. The other thing that I would add to it is you should, before you open up, you should know the guidelines that your state and your county health department have put out around masks, around cleaning, around distancing. You should know those. You should follow those. I think that is going to be your best bet to protect yourself, to say, I'm a coach, I'm not a health expert, I listened to the state, here's what they told me to do, I did it. And you should make sure that your employees, your parents, and your players know that as well. So I would distribute that. Most states put out kind of slick slides. I would distribute that as well, so that you're educating everyone of here's what we need to do if we're going to come back to work. And then again, use good judgment. Don't let kids share water bottles, kind of all the things that you should organically be doing. Just be more vigilant about those sorts of things.
And if one of your employees says, I don't feel well, send them home. Send them home, right? If people have been in contact, if your employees or you understand one of your participants has been in contact with someone who has the virus, do not let them play. Use what you would probably be, greater than normal precautionary measures for the next couple months at least.
Yeah, so I think these are really great points. I know if some people are looking for examples of what those waivers could look like, we'll follow up. And again, within the Slack group, we'll post that link about how to sign up. We can post some examples and directions. More broadly speaking, I think Nick and Ben have surfaced really important points about best practices here and what that looks like. I know that's one of the things even the Play Sport Coalition is looking at is how to provide and organize a lot of those resources and guidance, so that you can figure out really what is the best way to be proactive with respect to safety and that commitment in the organization. A couple other questions that are coming in here. So one of the questions, I think, Terri, maybe just to put a fine point on this with Jason, a lot of people are trying to understand is about expanding the PPP to take advantage of the program if they have 1099 employees. And so just to be clear, when you're talking about this idea of advocacy on the Hill, that is one of the things that you're looking at, is so that the 1099 organizations that have a lot of 1099s will get more assistance than they're getting right now.
Yes, the focus of our Hill initiative is essentially to figure out an appropriate calculation of relief for youth sports providers, recognizing the fact that most of our youth sports providers are not carrying employees. They're carrying 1099 employees, they're carrying 1099 contractors, they're carrying volunteers, yet there's still a significant amount of operational overhead and expense.
Yeah. One of the other questions I think people have is would those funds be distributed? I think there's concerns or questions. If you're a nonprofit, if you're a for-profit, is there a vision about the allocation of those funds with respect to those needs?
Those are great questions. We are in the process right now of working with some people way smarter than me to figure out how that can happen. I think I'm going to be pulling Nick and Ben into this conversation very soon here. One of the things that is very important to our coalition is that we ensure a couple of things. One, that there's priority given to organizations who are reaching at-risk kids. We want to ensure that those organizations who are reaching the kids who need it the most are getting the resources they need to survive. The second is that the process is transparent and it's easy to access. We've seen through what's going on with PPP and the SBA that this process right now is very complicated, and it's leaving behind a lot of the smaller organizations who just don't have the resources to hire experts to help them translate all this to get to the funds. So our coalition wants to, one, be a resource to help organizations understand how to access the funds, but also give light to your voice so we can figure out a way and a mechanism to get these funds to you as efficiently as possible. The first thing is we got to get the money, and that's where we're at right now. We're trying to rally the troops, build a good coalition so we can ensure that Congress can understand that this is a real priority for helping youth sports providers, and they need money now.
Yeah, I think that's great. And one thing I think is a great perspective is Benita, who's part of the kind of leadership team that we're working together with. It's Benita Mosley helps lead Laureate Sports for Good. It's this incredible organization of sports and development organizations that are serving some of the neediest populations through sport. She also has a daughter that happens to play travel volleyball. And I think what she represents, and she's given interviews to this effect, is that the design of the fund is to make sure that everyone is finding the right place. We want to make sure we're certainly prioritizing organizations and needs and communities that often don't have access to these kinds of programs. But at the same time, the design of the fund, the reason why we're asking for $8.5+ billion is to try to meet the holistic needs of the youth sports ecosystem, because there's a place for every organization, even if there's some way that we're making sure that the distribution of those funds is happening so that it's not only advantaging organizations with the most resources. I think that's a good way of summarizing a lot of the points. Nick, I'm going to rapid fire a few questions at you, because we've talked a lot about the PPP program. So there's a couple, before we get into some clarifications there, there's also this thing called the EIDL, or some people might refer to that as a 7B loan, a disaster relief loan. So how does that relate to the PPP? If you're focusing on the PPP, can you focus on the EIDL? Should one be thinking about the other?
Yeah, so the EIDL it's called the Small Business Administration Economic Injury Disaster Loan. That is a pre-existing program that existed before coronavirus, and that's the program that is usually activated when there's, say, a hurricane or a tornado. And the SBA comes in at one location, and there are loans given to small businesses to either, there's one that is to kind of rebuild physical property, and then economic injuries, replace lost income. Those programs are now mutually exclusive from the PPP. So if you get a PPP, you cannot get an EIDL loan. Most of my clients, the EIDL loans are not good options for. Those are real loans. There's no forgiveness. The amount you can borrow is not as much. I think for the folks on this call, that may be a better option, but recognize that, I'm saying the folks on this call may be, EIDLs may be better options than most of my clients who I deal with, but those are real loans that you got to pay back. They've extended repayment terms, and there can also be, depending on the size of the loan, personal guarantees from the owners of the business and collateral required, including mortgages on personal owners' houses. So signing up for that loan is a very different commitment than a PPP loan, which is no owner guarantees and unsecured. And so that is, you can apply for both, but once you get one loan, you can't borrow both.
Yeah, and I guess the only scenario, I think my understanding, Nick, is you could take both loans if they're for different purposes. So if one is for payroll and the other is like you had a collapse in your facility, but you have no funds to be able to fix the roof, you could technically apply for that EIDL loan related to that. Is that right, or is it, or both? How does that work?
So so I'm going to use the right terms. There are SBA disaster loans that help you in a disaster. Yeah. There are two types of disaster loans. One is the physical replacement, and one is economic injury income replacement. You can get a PPP loan and an SBA disaster loan for different disasters. The coronavirus pandemic that affects your business and you lose your income, that you cannot get an economic injury disaster loan for lost income from coronavirus and PPPL. If you were in Nashville and you had your building destroyed by a tornado or a hurricane this summer in Miami, you can get a disaster loan for that purpose and a PPPL loan, but you can't. But the coronavirus is one disaster that affects both.
I got you. And the only other thing is there a threshold for collateral in sense of, is it under 200,000? Is that a situation where you might have to put up, you don't have to make the personal guarantee that you might otherwise have to put up?
Like I said, I don't know the numbers. I think it's 200 or 350,000. There's some loan amount where below that. And of course, because they're the government, nothing can be simple. The numbers are different for the personal guarantee and for the collateral, but there are smaller amounts where it doesn't require owner guarantees and it doesn't require collateral. But if you're above the amount, then the standard is that you need owner guarantees from all 20% owners and collateral, which would include personal mortgages. And again, if you have other debt, collateral can be complicated. So the disaster loans are really good to rebuild destroyed buildings in a tornado or a hurricane. The economic injury aspect it's tricky and complicated. It really only worked in Deepwater Horizon spill and with BP in New Orleans. That was the first program that they launched because it seemed to be most relevant for what's happening, but it's frankly not a great option for many businesses. And once there was a little more time to think about it, that's when the PPP came in, and the PPP really eliminated a lot of the challenging parts of the SBA disaster loans, but it's still another option.
Yeah. So, and the only thing I'll say about that option, I know there's some other questions that are coming in about it, is one, it makes sense if you don't have a lot of if you have mostly 1099 employees, you've had this interruption in your business, and you think about it, that amount of money replacing the income below a certain kind of threshold, and let's use $200,000, whatever that actual number is, then in that scenario it may make more sense to for your organization than it would for the PPP side if that's not the structure of your organization. Even as you hope that the work that Terri and Jason are leading, the overall work of the Play Sport Coalition would kind of drive that as well. So that is that I think is on the EIDL side. There's also some more technical questions that I'll throw to Ben and Nick on the specifics of how organizations are dealing with hiring back. So one of the questions is, if you reduce the number of staff but increase the pay for staff, is that okay? So if your headcount changes, but if you're paying them a little bit more money and it's below that 100,000 threshold, does that work, or how does that impact the use of the funds and or forgiveness?
Yeah.
I don't know,
So
Nick
on
or Ben will take
PPP, there's two separate ways that your forgiveness can be reduced. One is headcount. One is if you reduce pay. They are independent of each other. So if you cut your number of people in half but double their salaries, you don't get credit on one side or the other. So it is a. I'll say this: it doesn't benefit. The forgiveness calculations are more complicated than they need to be, and I think it is. And I have a number of clients who kind of went into this thinking, well, I'm going to get 100% forgiveness. I'm not laying anyone off. I'm paying for employees. It's hard to get 100% forgiveness. There's a lot of little ways that you get reduced, and so I think even the businesses that are, hiring everyone back, paying full wages, are going to struggle to get 100% forgiveness. There's going to be some portions. Right.
Okay. So one of the other questions that I think Nick brought up, and maybe Nick, you can tackle this as well, is there's a lot of questions of saying, I don't know what the future is. I'm hoping the program's going to come back in the fall. We don't control that, or at some point in the late summer. So we're going to take the PPP loan. We want to keep our staff employed, but it may be, hopefully youth sports were able to go. We may be able to go back in some form, but it's possible we'll still be shut down. And if there's no more PPP, we'll have to lay them off again. So how is an organization kind of navigating that risk where they're basically paying them from, through the end of July or whatever that period may be, but they don't have enough certainty about it's coming back? What is the risk that they're assuming around that?
So I'll say this, the risk, I get a lot of questions of, my so-and-so told me this is free money. And my answer is, well, no, it's not. It can be eligible for forgiveness, but the risk is you are participating in a government loan and grant program that was put together very quickly with, frankly, very little checks on who money is going to and how. And even in a well-designed government program, there was some percentage of fraud. And in a hastily put together, rushed program, there's going to be a higher percentage. So there will be after the fact reviews, and it is unclear who's going to do that, what the standards are, who's going to be in office. So signing up for the program is itself a risk because you're now opening yourself up to scrutiny, and you don't know who's doing it. And you don't know what kind of political bent they're going to have. That's where I think the big risk is if businesses take money and then in July they let everyone go again. I think that's just a risk. My sense has been for businesses that are truly shut down with no revenue and they don't have big fixed expenses, the benefits of the PPP program aren't great because their employees can get unemployment, and all they're doing is they're essentially serving as the middleman to replace unemployment insurance, but then take risk if the government's not going to like what they do. If you have, if you have rent, if you have mortgage, if you have some skeletal operations where you can support, there's some more benefit in getting the money. But if it's not and it's got to go out the door to certain people, and then you kind of are participating in this program that has frankly been bumpy at best and is going to be a punching bag for the months to come.
Right. So Ben, bringing you in, there's a few questions that are coming at you, and then I'll close with Terri and Jason. It seems that one is a question of if you cut the pay of some of your employees, can they apply for the difference and get some relief from the government in terms of unemployment assistance? Like, is there a way that is made up? I don't know how that works, at least at a federal or at the state level. I think you're muted.
That's a state by state determination. And so it's a little challenging to answer that question, except to say that it's my understanding that it's determination of the employee that gives them the right to apply for unemployment. And so whether that's the way it is in the state of Florida, where there are differences in other states, I couldn't say.
Yeah, and there's some notion I think in New York is around shared work programs, how you're eligible for that in terms of if you're furloughing to a part-time basis, can they make up the difference? That's been pretty complicated for I know organizations to try to identify, but it's certainly I think at a state level I think is your point. There's also a question, a couple two quick questions for you. One is about approaching their landlord to suspend their rent until they're back in business. Ben, any tips on that as it relates to a contract you may have signed and how you might approach that? I know I wouldn't want to be on the wrong side of a negotiation with you. So what tips can you give everybody?
So I've looked at a lot of leases in the past couple months about to look at whether there are clauses that will provide protection for tenants who don't want to or cannot make their rent payments. I'll tell you this, most leases are written like mortgages. The mortgage is written for the bank's benefit and the lease is written for the landlord's benefit. So I have not seen an instance in which a tenant has the ability to have their performance, that is their rent payments, excused because of what's called a force majeure event, which is something that people on the webinar may have heard that phrase used. Typically it's the landlord who has the right to not perform under the lease if there's some kind of cataclysmic event like the pandemic. Tenants tend not to have those rights. But look, these are scenarios in which the landlords are trying to cash flow just like the businesses are. And so there's never been a better time to ask for rent abatement than rent forgiveness than right now. Some successful strategies I've seen is asking landlords to apply security deposits that are being held for the next couple months. It allows them to take cash. It shifts a little bit of the risk to the landlord if the premises are not left the way they should be when they're gone, but at least they're getting money and they're allowing the tenants a little bit of breathing room. You're most likely going to reach success with a landlord if you say, look, we're business partners in this. I need the space. I understand I have to pay you the money, but I can't pay you any money if you put me out of business right now. Give me time. Let me re-amortize. That is, let me take the payments that I missed this month, next month, the month after that, tack them on at the end of the lease. What I need is breathing room, right? There's nothing wrong with the economy. The economy was going great. Everything was good for most people. So there's no reason to believe that given enough time to come out of this, there's no structural problems with the economy. People are going to still want to play sports when this is over. Parents want to send their kids to leagues. Yeah. People are going to play sports in the future. What you need to tell your landlord is give me time.
Yeah, the great suggestion. Final, give you a 30-second answer on this one. This may be tough. If they're concerned about liability and lawsuits, even if they have a waiver, if they aren't providing all the masks and sanitizers, are they really protected? Like, how do they think about themselves? Are they really insulated by that waiver because they're concerned about, people being litigious in the wake of all this stuff?
Look, there's not going to be a magic bullet that's going to slay all risk of lawsuits in the future. The waiver is a start. The waiver is a good thing to have in place. It should protect most people. If you don't have masks, if you don't have sanitizer, again, to Nick's point, look at how your state and local government officials are allowing opening up to happen. If you need to have hand sanitizer or hand soap in your facilities, for example, if you at a golf course or at a pool, you need to have those in place. If you don't have them, not only you are running risk of having liability from the participants, but you run the risk of having the government come down on you, which is maybe even worse.
Yeah, that's great feedback. Terri, one of the things I see in all the comments, one is it makes every case about why there's more assistance and support needed. And I think people are appreciative of the work the Play Sport Coalition so it gets off the ground. But they're also saying, wait a second, who's actually going to tell you when it's safe to play sports? There's no authority here. It seems like things are all over the place. Like, what is the way to bring people together to provide some better guidance? So I don't know if you have a comment on that before I wrap with a few final thoughts and resources for today.
Yeah, it's a great question, and it's one of the shortcomings of this country that we don't have an Office of Sport or Ministry of Sport, and it's something that the youth sports community has called upon every administration to create, and we unfortunately now more than ever need that kind of leading body. In the absence of that, we are trying to fill that void through the Play Sports Coalition, and one of the major issues we're trying to tackle right now is working with experts from the community, from the medical community, from the sports community, from the leagues, to try to put together some best practices for what return to sports could look like. This is a new environment for everyone. Do you have to have face masks? Is that even feasible when you're playing basketball? As a basketball player, I don't think I would have been able to breathe, and I was already slow enough as it is. I mean, do you need to have temperature checks? Well, who can afford that? Who pays for that? I mean, these are all questions that we need to grapple with as an industry. So we're coming together to try to figure those out. And then part of that process will be engaging with state and local elected officials to get their endorsement, to get their feedback, to help roll those out, and then hopefully to provide resources that could then go back to the youth sports organizations to secure the necessary equipment, like the sanitizers, like the temperature, like the thermometers. This is all the process that our coalition is trying to take right now.
Yeah, and one thing I think I'll say is, as we think about where to go from here, it's a great sign that some states are opening up, and hopefully for all of our sakes that we're getting to the other side of this. But it's going to take some time, and as organizations are navigating it, one is it's how do we make sure that they can take advantage of the programs that are there. And so Nick's perspective is something valuable there. And certainly Terri and Jason, your leadership and efforts on the Hill, especially with the Play Sport Coalition, is such a great way to make sure that this industry is going to get more and more support, both the youth side, but also more broadly, also even how the adult sports or organizations that are serving those with specific needs. And then Ben, obviously taking into account questions of liability as they operate. These are all things that organizations are going to think about at another level than just what happens on the field or how to coach their kids. And so we recognize the complexity that's there, and we want to make sure that there are the resources there for that to happen. And so as people project on, we want to make sure we're continuing to help provide resources to this community, among others. So a couple next steps. We'll make sure that if you're asked a question that wasn't answered, we'll answer that in our Slack group and also provide some of that in an email wrap-up that comes as well. So Jamie will go ahead and post in the chat tool that link to Slack. If you don't know what Slack is, this is your chance to learn a great free tool that you and your organization could adopt. It's certainly the way of the future as we think about virtual and technology. So joining that Slack group, we'll be able to provide real specific answers here, and we'll follow up with Nick and Ben and Jason and Terri to get their take and provide the best answers. And the second thing is we're going to end today as we wrap, and you'll get a link to a survey that gives us a sense of what all these youth and local sports organizations are thinking, particularly around return to play and some of the issues that you're navigating. And if you're filling out that survey, you're going to get the first responses back to understand what other organizations are thinking. So it takes less than 4 minutes to fill out. Go ahead and answer those questions, and then it'll give you a sense of what organizations are navigating the very topics that we created or we identified, and you'll get those perspectives and answers first before anyone else. So with that, I want to thank our incredible panel. Nick and Ben, you are amazing. I know there's lots of questions around dealing with lawyers. I'd hang out with you guys anytime, and appreciate kind of the insights and perspective you're bringing. You deserve all the great reputations that you had that preceded you. Terri and Jason, it's been awesome working with you under the context of the Play Sport Coalition. And more importantly, I appreciate your leadership for years in this field. So thank you for being with us. Thank you all for joining. And again, we're excited to continue the conversation and make sure you all get through this period, because youth sports will come back, we know, with your leadership better than ever. So thank you so much, everyone.
Thank you.